All right, the one and only footprint tutorial, the only one you'll ever need to watch. Trust me, trust me. But before I go into that, is I want to cover is the handy dandy educational content that is my website. Here you'll find all the educational content you need in written format in case you don't want to watch a video, listen to my voice, whatever it is. Maybe you're going number two, I don't know. But here I have written every single facet of what I trade, the principles that I use to trade, whether that's price distribution, volume profile, depth of market, you name it. It is there. If you guys want more educational content, feel free to check the website. I'll leave it in the description below. But nonetheless, let's get into footprint charts. And now let's get into the footprint chart. Now, before I dive into that, I'm going to let you guys know the screen here, this chart right here we're looking at, this candle print, we're looking at this general area of concern. It aligns with this one here. So these are both the same assets, the S&P 500 on a 5-minute time frame. We're looking at this specific area at the time and price. I'm gonna cover briefly what a footprint shows you when we're trading here, how to identify what was going on here to maybe potentially have caught this capitalized on this move up because it was an aggressive move up. And we're going to be coming down from top down to what it is a footprint chart is, what does it show you, what are imbalances, what does absorption look like, what is delta, what is everything on this chart, what's going on in here, right? I'm going to be explaining every single item line by line, so make sure you put your notepad in, start to do it and start to doodle a little bit. No, take serious notes here because this stuff is going to be really important in order to properly learn how to profit using footprint charts. All right, so first and foremost is cover exactly what this is. This is a 5-minute footprint, so you can see here the same asset class, S&P futures on a 5-minute time frame. So each candle you see here essentially equivalent to 5 minutes of price action. Now, from the very beginning, what does a footprint show you? Well, just as a candlestick would, shows you the price that we're transacting at. If you go here across the way horizontally, this is the price we're transacting at. The price axis is on the right, similar to you would see on a candlestick chart. It's also based on time. So which one of these prints is again 5 minutes. So there's definitely that correlation between a candlestick chart and a footprint chart. But those are the only two correlations you will have. Everything outside of that is going to be essentially more information that you wouldn't get from a traditional chart. And that's going to be imbalances. Well, what is an imbalance, Rick? What the heck? Imbalance is where one party is the aggressor. In other words, there was more buying or net selling than there was of the passive buying or passive selling at the market filled and executed. So you would see that shown on a footprint. There's different ways that the footprint chart will show you in terms of percentages which numbers get highlighted. Per my specifications, it's only when there's a 3 to 1 imbalance. So in this case, you can see that there was an imbalance formed here, shown as yellow, another one showing up here, right next footprint over, and another one here, and so on and so forth. So as price is going lower, you're getting sell imbalances getting triggered, and you can see here that on the bid, there was some more getting filled on the way up, and we're going to get to that in a second. But more or less, imbalances are shown, and you won't see that in the candlestick. So very important component there. The other one will be absorption. Now, what is absorption? It sounds exactly what it sounds like. Is an area or price where buyers or sellers, depending on which way we're transacting, literally gobble up or absorb price action or stall price. Now, what does that look like on a footprint chart? Lo and behold, we're going to look at it here, and it resulted in a beautiful result. So all these things, imbalances and absorptions, are very crucial to identify in a footprint chart that you will not see in a candlestick that will give you the potential to spot reversals and exhaustions. So in this case here, the absorption took place here. This is a sign of absorption. Now, why? How do you think this is a level of absorption? Well, for number one, first and foremost, we're below a key level. This was a key level for the S&P futures. We were transacting or attempting to break down. We were trending up in the morning. We broke down, lost a few levels, and thus absorption showed. In other words, buyers showed up and attempted to gobble up all the net selling that took place here. And you can tell that it's net selling into the next topic we're going to discuss, and that is delta. Now, I'll go into delta in just quite a bit. You can see that this is showing you negative delta or negative number. What that says is there is an exuberant amount of selling more than it is buying. But when that happens in conjunction with no price movement, no further downside, that is a sign of absorption. In other words, bulls held price gobbled up all the selling that took place, hence the thicker profile here in respects to the thin profile we had on the way down. You can see that clearly. These profiles are very thin every single time we're going lower, and the bulls attempted to absorb price, then resulting in a nice squeeze to the upside. And that is which actually would have seen happen on the DOM, the DEFA market, another indicator as well, as price rotated higher. Now, that is a one example of absorption and what it looks like. What is delta, right? Because I just briefly touched on it. Delta is going to be the buying, right? So the B for buying minus selling. So net selling. Every single buy order and sell order, you're going to get a number that is going to be equal to the difference between these two. So if you have a negative number, there is more selling than buying that took place. That doesn't necessarily price is meant to go lower. It's all contextual. So a negative delta does not indicate lower prices. It's all in context of what's happening at that moment. How is price reacting to these levels? Who has control and what potentially happens thereafter. So if you were to have more buying than selling, you would have a positive delta, which is exactly what occurred here on this print. This is considered delta on the middle column here, and that is what it looks like when you have positive delta. And as you can see, that positive delta did correlate to a move higher, but there was no follow through any further than that. Now, that's why exactly it's all contextual. It's not a one-all and a be-all indicator. All right, and there's still more. Yes, believe it or not, there's still more that this little thing here can show you, and that is stop losses. Stop losses are also a key component of something that the footprint chart can show you that you would never be able to guess is there on a candlestick chart. Now, why are stop losses important? We'll cover in a bit, but this is an example of a stop loss, or a few actually stop losses getting triggered. Anytime you have a zero auction that finishes on the top end on the bid side for the upside move is a sign that there was sellers getting stopped out right there. And then you have the same example shown on the downside moves. Now there's none to be shown here in this example, but it's important because whenever stops are triggered in a trending move, in other words, if we're trending down, right, and they take stops, right? Bulls have the ability to take stops, and price moves into that stop area. This is an area of interest that the bears need to control from further capitulating any more bears, just because if there's stops here, there's more than likely more stops to trigger in any increment higher. And if bears control the trend, in this case, that's what was going on, and start to get triggered, they then are susceptible to a short squeeze the same way if we were trending higher, the bulls would be susceptible to capitulation if those stops were to be triggered. So when you identify a stop triggered, you want to see what happens thereafter. Do the sellers aggressively hit the market? Now, when you have thin structures like this on the footprint, that's typically telling you that price was thinly traded, which means that there was an aggressive amount of market orders sweeping the market. Buyers are not willing or able to push price or hold price for that matter anything above the previous stops getting hit. So in other words, the bears did everything they could in their power to hold below more stop losses getting triggered. That is very contextual and very important to keep in mind when trading using footprint charts. When you see stops getting triggered, you want to see those bears continue to hit price aggressively. If they do not, they fall susceptible to a change in rotation or price. So that's another thing that you will be able to identify using footprint charts. Now that we have kind of some of the basic aspects of what a footprint chart provides to us, there is more. Yes, there's way more to unpack here. Now we're going to keep this video very short and sweet, but this example here of the same chart setup I showed earlier, which we'll cover once more as a recap, was this same zone here that led to that squeeze in price. Now, what exactly was happening there that led to the ability to squeeze to that? Now, if you understand all the concepts that we just explained, imbalances, sellers, absorptions, you can see that there is stacked imbalances. In other words, stacked amount of selling, aggressive selling, trying to break price lower. As you can see here in this chart, this is a key level from the overnight session, and there was an exuberant amount of selling, trying to break price lower to bring us into new lows. And as price divided into those areas, these sellers had incentive to step in and extraordinarily hit the offer and try to break price lower. Now, what ended up happening as a result is more selling took place. And as you know, If sellers do not get rewarded, they are easily susceptible to getting stops triggered, would then trample on each other in order to get out because they executed sell orders way too low, and buyers were willing and able to absorb price. So in conjunction of that, so we have sellers absorbing price, sorry, sellers imbalancing price to the downside. Then you have a mixture of absorption taking place, right? You have a thicker profile showing up here on the two previous prints, the 5 minutes, each one equivalent to 10 minutes of price action trading with no further downside, which means that these sellers that are hitting the offer right here as price is going lower are susceptible to getting stopped out. And you can see that there was clear cracks in that showing up as price was net selling took place 1.7k more selling than there was buying. The next print over was 500 positive delta. Again, recapping the same delta information as earlier. We had some more net selling, but did not equate to further downside. They tried to break us lower, and with no ability to do so, which then turned into buying, the buyers took control and they took advantage of all the net selling that was taken near the lows. They outbalanced the buying here, absorbed at the previous sell side absorption that took place, and that resulted in a relief in price, only to push us even higher and give us that nice, beautiful short squeeze that we see in this chart right here. Okay, so if you take a conjunction, all the things we covered in this video, and you couple that with screen time and experience and joining Rick Trade Live, you too can identify these opportunities to be able to capture those rotations or reversals in price to properly capitalize using the futures markets. So feel free to subscribe, hit the damn like button, and I'll see you guys on the next live stream.